Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is for Thursday, March 20th, 2014. We had kind of a back and forth day going ahead of the Fed meeting. Once the Fed meeting decision came out, and especially after the chairman's press conference, we took a turn, for the downside here, losing 11 handles on the ES at settlement and about 21 handles on the Nasdaq futures. The internals were also fairly negative. We were minus 1,500 issues on New York, minus 900 issues on Nasdaq, and pretty much across the board, just a sloppy day where I think a lot of people kind of put their wallet in their pocket and took a pause. But without any further conjecture, let's take a look at the levels and the charts and see what they have to tell us. All right, so here's a look at the ES futures. You can see the real, I think what you want to do here is take a look at the real bodies. The real bodies are pretty much similar to the previous day. We did undercut the previous day on a closing basis, so it is an outside day down. The 8/8 level was that's up above was not interacted with, and if we roll to the downside, we definitely have to take a look at the session's low, which was a good deal away from the close at about 1343, and then below that, got to take a look at filling this gap that goes all the way down here to about 1833. So for now, kind of a mixed up day. And the thing to keep in mind here, though, is that while we did get our Fed decision and the announcement, it doesn't necessarily mean that the reaction that we saw from today is going to be the lasting true reaction from the move. It takes a little time for the players in the bigger time frames to kind of digest what was said, and the lasting inflection points usually take a little while to reveal themselves. So let's pay attention to tomorrow's price action, and certainly also what happens on Friday, and not try to make too much of what happened today. I'm not discounting the sloppiness in the tape today, just trying to advise you to pay special attention to what happens tomorrow, because tomorrow can be very, very revealing, if you will. Moving on to the NQ futures, they were actually relatively strong versus the Nasdaq side. We closed within the real body of the previous day, so we don't have that little outside day down condition. Obviously, we did not interact again with the previous highs or the 8/8 level, so 3750 is going to remain the level to watch to the upside. We closed pretty much in the area of the 10 EMA. We still have this gap open here from last week to deal with. So those are all things that should be on your mind. And also, if this gap fills at about 3621.5, we're also going to be interacting approximately with the 50 DMA. So that's going to be a pretty big level, especially as we've been talking about when you consider the previous high here. The bonds on the day did turn lower. We've got our 13 exhaustion in place, but we're still wound up in this lateral range, and we're not going to really get any real clarification until we resolve this range here one way or another. Copper was weaker on the day, but at the end of the day, they did close it up on the day, which is really the first decent positive candle of the chart. So definitely keep an eye on copper prices. They call copper the PhD of commodities because it tends to lead the other commodities. We did have a nice volume spike here in the copper ETF, which is broadly followed. So I have to see if the market can make something of this. Today's trend closed at 0.94, which really didn't do too much to move the needle in the 10-day average. We did bump up a little bit, but we're still a really strong move away from getting to that 1.35 oversold area, and there's plenty of room to go to the upside if that's the direction that the market wants to take before we get to that 0.85 reversal threshold. Now, while the world market futures were fairly sloppy, the Dow Gold ratio did take a turn for the better to the upside, if you will. Just because gold was so weak. Gold closed down about 20 on the day, so it actually gave the relative performance nod to the Dow. But we're still below this breakdown level. So even though the Dow was starting to assert itself on a relative basis to gold a little bit in the very short term, we really haven't done too much to recoup this level that was lost. That's going to be important for the bulls to reclaim. Looking at the multi-sector daily chart, the XAU was certainly very, very weak. A little weakness in the BTK. The banks were really the strongest sector of the day. You can see the green line here representing the BKX was pretty strong. The SOX took a breather and really didn't add on and push and make good on the breakout. So let's move down and take a look at the individual charts. Here's a look at the XAU, which was the last lagger on the day, was down just a little bit less than 4%. You can see the key thing here is that we closed down below this little handle here that the market was working on. We got to this two-ways level, weren't able to reclaim it and frame shift this, and now we're feeling the effects of being in the overbought territory on the GAN box. Levels to watch to the downside are going to be the 50 DMA, and then much more importantly the 200 that comes in at about 94.32 or so. The utilities were also really weak on the day. Big down candle here, so you have to watch and see if this turns into a double top. We don't have any support right now from the GAN box. We're not bumping up against 8/8 or into the overbought territory, and we're only about 6 bars up in the exhaustion count. But nonetheless, we do have the potential here for a double top, and have to respect that and see how it unfolds. The BTK was fairly weak, but we're still boxed up around this 8/8 area. Closed at 28.1250 or thereabouts. So until we resolve this area one way or another, we're still just kind of marking time here. Also note, like the other chart, the plus 2 ways level was attempted but not taken, and which means that the chart did get overbought but did not frame shift yet. The only real positive thing here is after getting overbought into the plus 2 ways area, we didn't get a reaction to the downside. We did move down a little bit, but really just started going sideways here, which is somewhat encouraging for the bulls. Transports on the day were kind of middling. Really nothing definitive here. We're still in the overbought territory on the GAN box and not really able to punch through that. If we do break out, this plus 2 ways level is going to come into play, and then potentially a frame shift to the downside. The level to watch is going to be the 50 DMA, which is also going to be roughly consistent with the highs here that contain price here for about a month. Oil services traded pretty much in line with the market. The one feature with the oil services is that we are now 10 days up, so there is potential that we could get an exhaustion warning as early as next week in this if we do continue to the upside. BKX remains contained under the static trend line. If we can break that out, that would be a really, really big positive for the overall market. But for now, we're still contained. If we do break out, that's going to be a pretty big deal. And leadership from the BKX is always welcome since it's such a economically sensitive sector. So I want to close out today's report with a look at the gold futures. Gold was down about 20 on the day. Was opening up and playing around with that 8/8 level at all right, now I've got the right chart up. Here's gold. We opened up and attempted to push out above this 8/8 level at 1375, but we're not able to do so. We did get one close above it. We opened up with a gap up one day, but weren't able to put on anything on top of it. What we've done now is we've rolled back down into the handle area of this cup and handle. Here's your cup. Here's the 13 at the bottom of the cup, and then here's your handle. So we've come back down into key support. So we've got the key support here at about 1320. If we break that to the downside, that's going to be a pretty notable development, and definitely something that's going to put the key moving averages back into play, the 50 and the 200. So for now, we've got some pretty good downside here that's been brewing. But note, we're 3 days down now. Here's 1, 2, and 3. 3 days down. A lot of times after 3 days down, there will be a little bit of bidding and some short covering. So definitely don't rule out the longs. We are in the area of support on the gold futures, so definitely bracket tomorrow's play. What I would recommend doing is what we've been doing in the trading lab on a lot of days, which is using the first 15 minutes as the opening range, and then taking a breakout above that, or a breakdown, depending on whichever way that opening range resolves itself. All right, folks, as always, thanks for listening. This has been Rich for Tradesight. And please, if you find these videos useful and informational, please give us a thumbs up.